Our guest says silver may be overvalued relative to gold. That's after its price versus the yellow metal hit the highest since 2013. Let's get more from George Heppel, VP of Commodity Research at BMO Capital Markets. George, thanks very much indeed for joining us.
Thanks for having me.
Let's put up a chart showing that gold-silver ratio. It's dropped to about 50, and you say that's the lowest, that's the highest value for silver relative to gold in more than a decade.
Yes, absolutely. I mean, it's been a fantastic run on silver versus gold. When you look at how the price has moved over, since the beginning of last year, the silver price has more than tripled from about $30 an ounce at the beginning of last year, whereas I think gold has only gone up by about 100%. So gold has only doubled. And that's obviously resulted in the gold-silver ratio declining quite dramatically to a point that we haven't seen in a very long time. And although there is an argument to be made that this has been a long time coming, silver is often something of a fast follower against gold and will typically move with gold in, across various monetary cycles, but then often sort of do a catch-up trade with gold. The argument that we're making is that we think that silver is overbought versus gold. The key reason for that is because we're concerned about how the physical surplus is likely to evolve over the next few years. Our forecast suggests that the silver market is likely to see a net increase in the physical surplus of metal, which is likely to put upward pressure on the gold-silver ratio as silver depreciates against gold.
So your analysis is detailed, it's quite complex in parts, but you say there's a narrative of a silver deficit out there, but you're not buying it.
Absolutely. Well, silver has always been a commodity which has been very hard to analyze because on the one hand it's an industrial metal and it's used in solar panels and electrical like electronics and automotives and brazing alloys, but on the other hand it's an investment metal, so it's in a way it should be treated a lot like gold. And as commodity analysts we've always kind of struggled to square those two worlds that silver seems to straddle. But one of the pieces, our most recent piece of research, we've basically looked at the physical surplus for gold, so that for silver, so that's all the silver that's produced in a given year, and we subtract off all the consumption of silver, and what's left is what we describe as the physical surplus. And we've analyzed that going back to the late 1970s, and what we find is a really strong trend whereby the physical surplus and the gold-silver ratio tend to move together. So when there's a large physical surplus in silver building up worldwide, we tend to see the gold-silver ratio drift upwards as silver is valued less against gold. But when we have times of a very weak, very low physical surplus, we've got all that capital chasing a very small number of available ounces because that's what's left after silver has been consumed. And you see the gold-silver ratio start to fall as a result. And that's certainly what we've seen over the last few years. And over the last few years, the trend has been for the physical surplus actually to be relatively tight. And the key driver of that has been the solar industry. So since 2020, the solar industry has been responsible for around 60% of all of the increase in silver demand. And that's because silver is the best conductor on the periodic table, and so it's very important to boost the efficiency of solar panels. And obviously we've had something of a solar renaissance across many parts of the world, and that's driven silver demand as a result, and that's resulted in the gold-silver ratio finally falling to 50 where it is today.
Can you just...
The challenge that we... Yes, sorry.
Sorry to cut you off there. You say that this growth in silver for silver panel use is likely to plateau. Why is that? Can you just remind us, please?
Of course. Well, I would say silver is being hit by something of a double whammy right now in the solar sector. The first issue that silver faces is there is a lot of evidence to suggest that the solar industry might be either close to its peak or past its peak. We've got various we have various analyst houses predicting that solar installations worldwide might be at their peak. Wood Mackenzie, BNEF, the International Energy Agency are also suggesting that solar installations are past their peak. And there's various reasons for this. I mean, one of the key reasons is just that we've had such a fast run up in solar installations over the last few years that pace could not be sustained. But also we're seeing signs of saturation in China especially, and there is a very, very large bottleneck in terms of getting projects attached to the grid as well, which is also causing issues. So that's the first issue for silver is on the solar sector. The second issue is that we're also seeing increased evidence that solar panel manufacturers are trying very hard to reduce silver content in their solar panels. Now, solar manufacturers have been steadily thrifting out silver from their solar panel designs for a while now. But over the last few weeks and months, we've seen several very, very large Chinese solar panel manufacturers announce plans to aggressively speed up their silver thrifting plans, and as a result, there is a big reason to believe that silver demand from the solar sector may have already peaked. And given that the solar sector represents around 20% of all global silver demand, that is a cause for concern.
We'll have to leave it there. We could talk silver with you all day, and even that lonely valence electron that plays a part. George Heppel of BMO. Thanks for watching Commodities.